right now, I can guarantee that there is at least one thing that is massively holding you back from unlocking your full trading potential. Because as we can see here, you probably look at the results of what your strategy could perform if you executed it perfectly. But when you look at your actual results, you can see that gap between there. And that gap is your performance discrepancy. And we need to minimize that gap as much as possible to increase our profit potential, because as you can probably see, your strategy has this massive potential, but your actual performance is limited. Now, why is that? Well, it's typically because you have some psychological blockages that you need to overcome if you truly want to make it in this game long term. Now, today, I'm going to show you exactly the 3-step process that I use to kill your weaknesses, to identify them, to solve them, and implement practical solutions to overcome them today. Okay? Hi, my name is Matt Donlevy, and I am the founder of Photon Trading. And we help traders not just pass funding challenges, but actually get consistently profitable so that they can bank their profit splits long term by using the power of mechanical strategies. So we're going to dive into this super powerful 3-step process, and then I'm going to show you some examples of how I improve things that were holding me back in my own trading. And by the end of this video, I guarantee you'll be able to make a pretty instant improvement to your trading if you follow this correctly. So it might seem a bit obvious, but step 1, if you have a problem with the trading, is to identify what the problem is. Now, here's where people go wrong already, is they just go, well, I'm just not profitable, or I'm just not making money, or I just keep on making mistakes, but they haven't got very clear and identified what the actual problem is. Because as soon as you ask the right questions and you identify the exact problem, the quicker and more accurate of a solution you can put in to improve it, okay? So rather than just saying, I make mistakes, it's like, well, what specific mistakes are you making? Are you over trading? Are you exiting trades too early? Do you have a fear of losing and then you're not taking positions? Do you take too many losses in one day? So I identified a problem early on in my trading that I was, if I started off a day losing, I would end up taking a lot of losses that day, right? So that's identifying the problem. That's step 1. So step 2 is then asking the question, why do I have that problem? And this can be quite a tricky step, but it's probably the most important step to actually being able to implement the correct solution. So you might need to ask why multiple times. So you keep digging down and down and down until you find the true cause of why you have that problem. So for instance, if you're missing trades, is it because you're sleeping in? If you're over trading, is it because you're comparing yourself to others? We'll go through some more examples in a minute, but to stick to the one that I was talking about, I identified the problem that I was taking too many losses in one day. So why do I have this problem? And it's just because I found that, after I take 1 or 2 losses, I would want to end the day on green. So I would go on tilt after that losing streak, okay? So now I know what the problem is, and now I've identified why I have it. Now I can implement a practical solution that should, prevent that from happening in the future. So if I'm taking too many losses, and that's leading to me digging myself in the deeper hole, then I can very simply implement a max daily loss rule. Okay, obviously you have to stick to the rule, but that rule is there that I now know if I take more than 3 losses in a day, I'm out, right? No more trading, come back the next day from a clean slate. And I can't begin to imagine how much potential losses that has saved me from forcing me to walk away, when I'm having potentially a bad day. Okay, so there can be lots of other reasons here that you need to figure out for what you can solve. So let's go through a few more examples. Okay, so one instance of a problem I had was when I looked back through my journal, I found that I was taking a lot of losses that were counter trend. So something I didn't mention at the start, but for this to be effective, you guys need to be journaling and reviewing your trades. Okay, I don't think anyone really seems to do this these days. It doesn't seem to be spoken about enough. But if you are serious about this game, you need to be not just journaling, that's big step 1, but actually reviewing it on a frequent basis. Reviewing it at the end of the day, reviewing it at the end of the week, reviewing that at the end of the month, and then you get to the end of the quarter, review your monthly reviews, get to the end of the year, review your quarterly reviews. It needs to be a continuous process of improvement. But anyway, so I identified that a lot of my losses were coming from trading counter trend. Okay, so what is the reason? Well, it's probably because, a bit of ego in there. You want to catch that reversal. You want to get that sniper entry, as people love to call it on social media. Okay, so what could be a solution to help prevent this? Well, for me, I call this phase D trading, and that is when we are trading counter, swing, and internal. Now, I've done a whole video on this on our channel, so I'll link this here if you want to go dive into that deeper. But in more simple terms, basically phase D is when you are taking a trade that is against the swing trend and against the internal trend. So basically almost everything is against you, and I found that for most times it just wasn't worth trading, and it's worth waiting for a bit more confirmation. Okay, now there are certain times in my plan in which I'll do it, and I have that very more tightly defined now. Basically when we have higher time frame alignment, but again, that's in that video, so I'll leave that for that. The point here, only because I journaled my trades and then spent the time to review them, could I identify a common thing that's causing losses, and that was trading against the trend. So now I've implemented a rule, no more of those trades, and now it's super simple because when I get the urge to take those trades, I look at my trade plan, realize it's invalid, can't take it. Job done, saves you from a lot of headache and lost money. Next problem, I realized at the end of the quarter, I've taken a lot more break evens than I normally would. So now you have the data, go back and see, and I'm just trying to target too far. So I'm taking the right trade, it is going in the right direction, but maybe I just need to reduce my targets a little bit, okay? Now, obviously reducing your target, it is gonna affect your average risk to reward, but it might increase your strike rate and also increase the actual amount of profit that you bank at the end of the day, okay? Because your winners might be smaller than before, but you might be banking more winners than rather than taking the break evens, right? So one of our coaches, Tomas, he recently reviewed his trades before he was targeting 5R, and in backtesting, that is actually more profitable than targeting 2R in the long run. But actually backtesting and live trading are two very different things. And when it comes to executing live in the market, you can miss one day, whether you're sick or you're just, you're not trading, you're doing something with your real life, and you might miss that day where there's 2 or 3 big winners. And then over the course of the month, your edge doesn't play through. Whereas if you have a smaller target, you're much more likely to hit those targets more frequently. And then by the end of the month, you actually outperform what would have been, if you targeted that 5R. So don't be afraid to have those smaller targets, because in your live trading, it can actually result in better results. Obviously, it's easier for your psychology as well if you're banking those consistent gains. Okay, but that's a whole nother topic. Again, the point, identify the problem because you've got the data, you've journaled and reviewed it, find the reason, then implement a practical solution. Okay, last one here. I found that I just wasn't that profitable during the New York session over the long run. It just wasn't really worth it for me. And what's the reason why? Well, typically it's because I get up early, I start the London session, I'm at my desk all day. By the time kind of the New York session is coming around, maybe I'm just getting old, but I'd be pretty tired. I can't mentally hack it. I start making mistakes. And even though I wasn't tired, the other thing I would find is that, you want a return on investment on the time that you have invested of sitting on your charts all day, doing your work, doing your analysis, being patient. Maybe you can do it for a day, maybe you can do it for 3 days, maybe you do it for a week, but eventually you're gonna, your monkey brain's gonna take over and you're gonna wanna get involved. Okay, and all of these reasons were adding to why I was making mistakes during New York, and it just wasn't worth it when I, again, can look back through my data and see that. So what's the solution? Nice and simple. Only trade the London session, right? If I'm day trading, or what I will sometimes do is, if I'm still at my desk during New York in the afternoon for me, but I'm not gonna trade my day trading strategy, I'll stick to kind of that swing trading, slower approach, higher time frames. It's a lot easier. I'm less likely to make mistakes. And that for me has been a big game changer, and also giving me more freedom, right? Which is ultimately, why the majority of us get into trading as a start. So hopefully you can see this process now. But a point I want to make before we wrap this up is you can have the same problem. Like multiple traders could say, we've got FOMO. We'll talk about this in a minute. But that can be caused by different reasons. So this is why step 2 of really digging deep, asking why and why and why and why, like doing those multiple layers, will help you to identify the true reason. Because when you get that true reason, that is when you're most likely going to be able to implement a solution that will actually solve that problem for you long term, right? So give you an example. Let's say you've got fear of missing out. Obviously that can mean a few things in terms of how that manifests into your trading, but let's say it means that you're over trading, right? You're taking setups that are low probability or don't really meet your plan, right? And it's gonna be the same problem every time, but there can be different reasons. So one reason might be, if you really dig deep, is it just because you need money, right? You're not financially secure. You're putting all of your eggs in one basket and depending on trading so much that you need money for whatever reason, and it's putting too much psychological pressure onto your trading, right? Causing you to overtrade to try and make that money. So what's the solution? You probably don't want to admit this to yourself, but actually the best thing for your trading could be to just focus for a little bit on increasing your other income stream or building multiple income streams, right? So that might mean taking some focus and attention away from your trading, but actually in the long run, if you can increase your income streams from other areas, reducing your need for money from trading from the market, because the market doesn't care about your need for money, actually in the long run, that's going to have a much more positive impact on your trading, right? Because you don't have that pressure to make money from your trading, and you can then make the right decisions, okay? So that's one such example. Another example is kind of related to the first one, but just having that scarcity mindset, right? And that can come from multiple different reasons, okay? So this is why you need to kind of go, right, I've got scarcity mindset, but keep asking why and why and why. And one such reason might be that because your subconscious doesn't truly believe in the capability of your strategy. And what I mean by that is you might think that there's, not enough setups in a month, or the profit expectancy isn't high enough. So you need to believe that on a deep, almost cellular level. And how do you do that? Well, you do it objectively. You track the data, right? So whether you do that from back testing or forward testing, you're simply recording every single valid and ideally high probability trade that your strategy provides. Even if you don't execute it, record it. Because when you get to the end of the month and at the end of the quarter, on that the longer term timeline, the better. And then you can see the potential R that strategy could make. That's going to really help you to have that abundance mindset, to truly believe the abundance of opportunity that the market provides. And that's not to say that we're always going to capitalize on that full amount, but we obviously want to try and capture as much of that as possible. But the point here is when you have proven that to yourself on a long enough timeline, that the strategy will provide enough opportunity, it really helps to be patient, and it's actually quite empowering to know that comes. And again, it will lead to making the right conducive trading conditions, right? Trading decisions, sorry. Another reason could be, you're taking a funding challenge and you've got those time limits on you. So you just feel like you have to try and find positions and obviously hit the target within that time limit, which wasn't ideal. Simple solution, there's a few here. One, a lot of them seem to be doing no time limit challenges now. So that removes the necessary pressure. You may only trade 1 or 2 pairs, but for the short term of just trying to pass the challenge, maybe it's worth bringing in, additional pairs to just increase the potential opportunity. Another thing you do, for instance, let's say you're a day trader, you might want to add in those swing trading positions as well, just to kind of double up on the opportunity potentially, or vice versa. If you're a swing trader, you may want to consider day trading if that's possible for your strategy and your time constraints. Or lastly, just for the funding challenge, you might want to increase your risk. Now, this is a whole other topic we can do another time, but my view on funding challenges is that you should only take challenges that you can afford to do multiple times in a row. And I think it's better to get super aggressive in your challenges, risk more than you would in your own normal trading, just to try and pass it so you're not wasting time. Yes, that's going to increase the likelihood of hitting the risk limits, but that's why you're better off trying to get there quickly rather than wasting months and months doing retries. Right, but anyway, that's a whole nother topic. But again, the main value I want you to take from this video is this 3-step process: identifying the problem, finding the true reason, and you might have to really dig deep here and just keep asking why and why until you get it, and then implement that solution. And the last one here, why you're overtrading, why do you have FOMO? Is it because you have that social pressure, right? Is it because your family are asking, have you made any money yet? How much money have you made? Blah, 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 blah. Are your friends saying, how's your trading go? Is it other maybe traders, on Instagram, you've posted that you're, this amazing trader or whatever, and now you have to try to uphold this image that you've portrayed or whatever, that can lead to you making bad decisions, right? So again, endless solutions to this depending on what the exact specific reason is this, but a simple one is delete social media. Do you really need it? Or at least unfollow everyone in trading, apart from Photon trading, of course, that we are definitely worth following. Or don't speak to people who aren't traders about your journey. Like, when at the back of my start of my journey, I don't think anyone's in this position, but if you are in a position where you started your trading journey and you haven't told anyone who isn't a trader that you're trading, I think you're in an amazing position because you have none of that external pressure coming into you. But again, I'll talk about this another topic. But yeah, hopefully you can see the solution. It might seem a bit simple, but if you take the time to journal, have all of the data that is required to do this effectively, and then sit down every week, every month, every quarter, and every year, and you keep doing this, not just in trading, but with your own life in general, honestly, it's a game changer, because there is always a solution to a problem, but you just have to ask the right questions in order to be able to identify the true problem. Now, you might not get it straight away, but if you keep doing that process week, month, quarterly, that is when you get there, okay? It's acceptable to make mistakes, but in my opinion, it's not acceptable to keep making those same mistakes and just expecting different results, right? Just turning up thinking, one day I'll get consistent, or one day I'll be profitable. Like, no, you have to do the review and the work that is required in order to figure that out. Because when you do, it's totally worth it. You can release that valve and your performance can get much nearer to your full strategy potential. But the problem is, as it says here, most traders don't ask themselves that second question, which is, why do I have this problem, right? And that's why you can't effectively then solve the problem. So the more reflection, self-review, and contemplation that you perform as a trader, the quicker you will progress. Journaling, reviewing a journal, doing that on the weekend, it's not the sexy stuff. Most of us don't enjoy it. But I would say probably the majority of people who are consistent or who have got that consistency over the years, they went through this process, okay? So I hope you guys take this video seriously. I hope you really implement this simple but effective process into your trading, and it will make a huge difference. Take a look at either of these videos to make an instant improvement to your trading.